Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, September 18th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the daily time frame of the ES. What you saw in the previous session here on Friday, massive rejection of the previous session's high price with push price back into the previous day's range, back toward the midpoint. That was our initial goal for a Friday morning, was just rejecting and returning to the mid. I mentioned if we break the mid, it opens up the previous low, and that played out in big time fashion. Aggressive selling pressure, multiple hours of selling pressure on Friday, pushing prices back to 4,500. We're now sitting here in a very narrow range ahead of the RTH open. This is just 20.5 points of range, 49% of average range heading into the new week of trade. This Wednesday, we get the FOMC statement and rate decision. So we're going to get ourselves another FOMC key level. The last one we got was July 26th, 45.83 here. It's gone offered. And as of right now, the ES has yet to retest that level. Some of the other markets have already done so. So we will be likely developing a 2-day, maybe a 2.5-day range heading into Wednesday's FOMC statement and rate decision. Once that comes out, we could have a high volatility afternoon Wednesday, perhaps big time follow through Thursday, and maybe even into Friday. So something to keep up with here as we head into the latter part of the week. If we take a look here at the NQ, similar price action here on Friday, massive rejection here, outside reversal down, narrow range heading into the RTH session, just 45% of average right now. And again, this range could continue to develop here today, and on Tuesday we might see a 2-day range develop that is a bit wider as we head into Wednesday's market. Again, the last FOMC key level here was July 26th. You can see it right there. It's gone offered here, higher low back to it, and it's been sitting ever since. Again, we'll get another one here Wednesday, and we will likely get increased volatility from that event. As of right now, we have a range. This is a 14.5 up to about 16K. You have kind of the midpoint here, about 15.4, and right there, that's a pretty good solid range here of action. We could continue to see development in this range for a little while here until we get that big move up ahead. Obviously, the uptrending market has been in play and still intact here throughout much of the year, and really 14.5 would be a violation of that, which would open up more downside. Until then, we could continue to see longer-term uptrending price action until proven otherwise. Let's take a look here at crude oil. Now, crude has been on fire. Very, very strong. No selling this one. No fading. The strength has just been too strong. Outside day up here with a big continuation. Super narrow multi-day range and another big time push to the upside. And coming into the target here up ahead, 93.64 is the top of the key range there, 93.64. And we also have 94 as the edge. So 94 is the target. Right now, 94.18 from the low of the month would be your primary target for the month. So we got a little bit more to reach the average here, average monthly range, and we got plenty of more week to go. So again, multiple days here to get up to that target perhaps, but at the same time, any pullback, even intraday, could be a buying opportunity for continuation toward 94. If we're able to see a test of the 8 period, that might be a great jumping off point, but we haven't seen that at all since the outside day that really changed the tide. This thing has been moving well above that 8 period average. So right now, very, very strong. Narrow range of price action right now, 42% of average at the moment with a super upward bias. Again, any pullback next early or later in this week could provide a nice buying opportunity ahead. Let's take a look here at gold futures. Right now, gold up about 1/10%, 50% of average range, narrow inside day, trading right at year-to-date VWAP. Right at year-to-date VWAP. Year-to-date VWAP has been basically a flat line for multiple months, and that's right where we are. We've also converged to this point here where we've just kind of traded right around that point and will not get away from it. That's about 1945s here. I guess precisely the level is 1947.5. And when you look at gold here, you can see it really hasn't wanted to go much of anywhere, especially since this thing went flat. Once it's gone flat, it has hugged the flat line for a while. Obviously, this was a strong day one rejection at the previous year's high, and since then it's been a downtrending market, and prices have been rejected above 2,000 in big time fashion. So any pullback even into 2,000 could still provide a downside move up ahead. Anytime a potential break happens at 1900, that could open up a deeper drop into 1830, which is the previous year's close. So again, not really a lot of action right now as it chops around value. We may continue to see some range-bound action early this week as we head into the Fed later on Wednesday. If we take a look lastly here at the YM right now basically flat on the day. You can see kind of a doji-like day here. Very, very narrow range of about 30% of average range, 36% of average range to be precise. Very, very quiet. You only have 113 points of range, and it's been averaging 344 on a 5-day basis. So last week, 1, 2, 3, 4, 5 days, it averaged 344. Right now, we're at 113 points of teeny range. We could continue to see, again, range-bound action today, back and forth, and even over the next couple of days as we head into the FOMC statement and rate decision. The last time we got one here was July 26 here, and you can see again dropped away from it and slowly trying to come back to that level and just can't tag it here lately. So again, watching to see how this thing builds out early on ahead of the Fed, and then once that comes, we could see increased volatility later on this week. Like some of these other markets, this thing maintains a very good bullish channel at the moment, uptrending channel that continues to play out. Right here, we're kind of building some energy here. Maybe we get another drop and rally, but everything's still pointing up. We just haven't really resolved the upside just yet. So again, even if we were to pull back deep, say we get that key range low and go boom, that right there could provide an opportunity to trap and reverse until proven otherwise. So again, watching to see how this plays out here as we head into Fed week. All right, that is it for now. We'll see how this develops the rest of the week. Good luck, trade well, and I'll see you in the trading room. Take care.